Alright, what's going on guys? Edward here, back with another video. Thank you so much for being here again. Today I wanted to actually discuss about a couple of things regarding the smart money concept and all the videos and all the content that you normally find on YouTube, okay? Which is for free, of course. There's a lot of content based on smart money concept right now. And it's very overwhelming. I'm sorry. It's very overwhelming. The information that you normally find on YouTube, it can actually get you confused, okay? Most of the times they will get you confused because there's so many different ways of styles, especially let's talk about just smart money concept, okay? There are different styles. Every trader has their own style, okay? Every trader has their own style. And no matter whatever strategy is, they will develop a different certain style. Things that works better for them, it may not work for you or for somebody else, okay? So understand this, because I'm going to show you a couple of examples right now based on smart money concept and the different things that you can actually find on YouTube. For example, the way I teach, okay, the way I actually see order blocks is an example. Right here, we see that, you know, an order block is formed. It's a previous candle before a big move, okay? Whatever direction is. In this case, it's bullish right here, right? So an order block to me, it would be this, right? The previous candle before the big move. I would cover the entire candle, including the weeks, okay? I'm going to show you that there are actually about 4 to 5 styles that, on marking the structures up or marking the actual order block. I have a lot of comments every single day. Eduardo, how do you mark up the order blocks? How do you know which is the order block or how to mark it up correctly? I know why you guys are saying this is because you're watching most likely a ton of videos on YouTube and they are showing you different things, okay? Let me explain. Let me give you the actual 5 styles that you're going to most likely find on YouTube that based on order blocks, okay? The first one, as I mentioned, the order block would normally be the previous candle before the big move, right? So you cover the candle. That's one style of marking it up. Second style, I see some traders actually marking the body, just the body of the candle, right? To make it even smaller, just to refine the order block a little bit. That's the second style. Third style would be somewhere there on that kind, covering everything, including even this week. The bottom of this week, you're going to include it as well, okay? That's another style. You have 3 styles already. Now, the fourth style that I have seen also is that, look at the week, right? This week literally broke this previous low, right? There was a liquidity taken right there. So that means I see people actually marking this as the actual order block whenever a scenario like that happens. Now, if the candle closes like this, then okay, then maybe they will be just taking this candle like that, right? They will be taking the candle like that. So you see, I'm showing you that all the scenarios right now that you can actually that you can mark it up. All right, it's very, very important. You have different scenarios. As a matter of fact, there's another thing that you can use, which is the Gann box. You can use the Gann box to perhaps cover this thing like this, right? And you're going to be entering at the 50%. You're not going to be placing your position or buy order at this high right there, right? It's up to you. At the end of the day, that's going to be up to you. You can enter at the 50%. You can enter 100% of the order block. That is up to you. I'm showing you the different styles of entry, okay? The styles that I use, okay? Now, when you go on YouTube, you start looking different things, supply and demand, you know, there's a lot of traders that will show you different things and going to get you confused. And I'm going to show you here a couple of scenarios from this trader, okay? I do follow him. I've been following him for a long time. No hating at all right? I'm just showing you an example that he has his own style of looking for supply and demand, okay? And if you follow him, he has a lot of subscribers, by the way. If you follow him, if you've been watching a couple of videos, and you like his trading style, the way he spots the supply and demand zone, I recommend you getting his own course, mentorship, and just sticking with him. Because if you go from his videos to then jump into another trader, you're most likely going to get confused and very, very confused. Why? Let me just show you this example, just in comparison to these videos and my videos, okay? Just the comparison. And I'm just giving you a short example because otherwise I would spend hours in here just showing you different traders, right? Just going to give you a couple of examples. So look at what he is going to be showing right here.
Understand your environment, guys. So today I understand that, okay, it might be a slow, choppy day. Okay, the second thing is notice how we had resistance. Now we broke out of that resistance right here.
Okay.
Now, right there tells you we have a breakout market. Okay. So I'm just looking for level. Okay. The level.
Okay.
Which is the nice demand level right here. The market pulled back to that demand level.
Aha. Look at the zone. Like this is what it is even confusing to me. Like, come on, man, you're really gonna mark up the entire zone. It looks like he's just randomly drawing a box right there. Literally, it's just randomly because it's not exact. I don't know what he's exactly trying to cover. He just randomly drew a box right there saying that that's a demand zone. Yeah, in theory, yes, the market consolidated a lot there, but the order block is actually this candle right here. You see the aggressive move causing a boss right there? So this is the aggressive move. That means that the previous candle before the big move is this one. The actual order block is right here. No, just keep looking, keep watching.
So the next one is what? Entry, right? What do we have right here? A nice rejection bar, okay? Boom. As soon as the market went above this bar right here, okay, I got in. And I put my stop loss below that rejection bar.
Are you kidding me? So just look at that.
Okay, and I got out right here. So today, this was a quick one-to-one, and I'm done.
So you see, it just literally wasted the entire move and the entire idea of trading order blocks and supply and demand. You know what I mean? Let me actually show you because he entered right here with this rejection. I mean, just look at it. The way I do. I'm actually going to go here and go in the 5-minute time frame. I'm going to look for the exact same move right there. See if I can give you like my personal view on that. That happened on, was it March? Oh, it's actually right here. Yeah, I was actually looking at it. So let me show you. Let me show you. Right here. For example, you see the aggressive move, right? This is what he drew. Right here. Had very strong resistance, right? The price broke, very aggressive. He randomly, I'm saying randomly because he literally just did this, right? Without even watching or just measuring exactly the position, right? Just mark up that entire demand zone. And literally once the market just entered here, he was looking for a buy almost immediately right there, as soon as that candle closed. Now tell me, that's not a trigger. Is that a bullish engulfing? No, that's nothing. Maybe that's a hammer, but holy cow, like, he literally entered there, he placed his stop loss here, and he just went for a one-to-one. Really? The whole idea of smart money concept in trading supply and demand, it's the huge risk to rewards that you can get, right? So he literally just did that entry. And I'm like, come on, man, you wasted the entire move. Why? Because just look at this. It's so clear right here. Market, after this low, the market after, came back, created that low. That to me is liquidity. The market built up liquidity right there, right? There's people buying like him. He was buying and placing their stop losses right there, right? That's literally it. So he was trading as a retail right there. Because now look at this. Let me actually remove this box here, and I'm gonna put. That's why I don't use much support and resistance because it's not normally it's not that accurate, to be honest. So here was the actual order block. The order block was right here. If you wanted to enter at the 50%, your entry was, very well placed at the 50%. Now, your stop, of course, would be here, right? And your take profit, just right there, at that high. That's normally the target, okay? That would have been a 1-to-7 risk to reward. And he entered right here, which it doesn't make sense to me, but what matters here, if it does make sense for him, it's all that matters. If it works for him, that's all that matters. What I'm saying here, if you're following him, if you're following his videos, if you've been trading or you've been watching his videos, and you like his style of trading, stick to him. Maybe get his course, get his mentorship, but stick to him, because if you're gonna jump from him, the way he trades this, and now you're gonna go maybe to watching my videos. It's just this example. You can literally go in and finding other traders in order blocks on smart money concept. You're gonna find and you're gonna get confused because you know that the actual order block is right here. How would be he actually entering here in this position, right? So you are gonna get confused, right? That's what I'm trying to say. If you like his style, stick to him, only him, and buy his course, mentorship, everything, but only him. Don't watch anybody else's, right? Because you're going to get confused. That's my point. Let's go into the next trader. For example, this one right here, it's even funnier. This is, oh my God. Just look at what he explains. He also has a lot of subscribers. I also follow him. I'm not hating, but I'm just for this example right here. I don't think he actually knew what order blocks is by the time he posted this video. This was about a year ago, and he's just explaining something about order blocks. But look at the way he explains. To me, it doesn't make sense, and I think it's completely wrong. But I mean, what I say right now is it could be just bullshitting, right? Because if it works for him, that's what matters. If it gives him profits, that's what matters, okay? But again, it's just to give you an idea and how confusing you can get from jumping from one trader to another trader, right? Because of the different trading styles. So let me just stop talking. Just listen to him.
This right here is the end of 2020, beginning of 2021. These huge wicks and big candles rejecting off of this same zone is known as an order block. Order block comes up, big buy, huge. Little tiny butt end of this wick, big pump, big candles, big, huge candles. Then the previous high at 60.
I mean, yes, come on. Yeah, right. That's an order block. Yeah, for sure. That's nothing in there. There's nothing in there. And at least on the time frame that he is watching this on the daily, there's nothing there. Maybe there was an order block on lower time frame or something better, but he just literally just marked up a zone. He's not showing more details in there. He's not literally just randomly drawing a line just because there is a little support there and there's reaction, right? But he drew that is known as an order block. Just keep watching to see what he says at the top.
$65,000, 5,000. Then the previous high at $65,000 before it started cascading down. It broke that trend line if you guys want to learn about that. That is a new order block for sellers.
What?
Order block for...
Look at what here is marking the order block in there. So order blocks for sellers.
Order block for buyers. Order block for sellers. What did the price do when it got down to this previous order block? It went up again. Why?
Wow.
Because it is an order block.
Yeah,
there are orders living here for big billionaires and big financial institutions. Do you think that they want their original investment to go negative? No. So what do when it gets back down here? They buy more, pushing the price up. Now that previous all-time high, what did it do when it got up there? It hit it, rejected, broke it, tricked people, and pushed back down. You could have seen that here in the humongous divergence that we had.
Yeah, that's another strategy. You're showing just something else in there with the divergence. But that's not order blocks, man. That's definitely not order blocks. What you're showing there is just support and resistance. That's basically what you're showing in there. And divergence, that's something else. But that's not order blocks. But you see that, the way he explains it's very different, right, to other traders. Okay? Normally, an order block, it's formed after is the previous candle before a big move. Order block is like this. Normally, there is an impulse, correction, impulse. Then there is most likely something like this, a correction as well that mitigates and pushes up. Okay? An order block, it's formed after an aggressive buy. All right? And I normally look that the market actually causes a break of a structure. We could have a potential boss right here. Okay? I want to see always liquidity. All right? It's very important to always spot liquidity before you make the decision to actually go for your buy. If you want to enter right there or you want to enter at the 50%, is up to you. Not all the time the market will actually be touching the 50%, but let's say it did touch it here. You can use your Fibonacci. You're looking for pretty much confluences, right, to go in your direction. The more confluences you have, you're gonna have a very good potential setup. And because this is how you're trading, basically right here, this is the actual concept. the smart money concept and trading order blocks. Okay, so there's a lot of different ways, a lot of different styles on YouTube that's gonna get you confused. That's for sure. What I tell you guys, if you like his trading style just by watching the YouTube channel, that's why we are there, guys. As a YouTuber, that's why we're there, right? I consider myself also a YouTuber. Yes, I do post a lot of content on YouTube, and I want my students or future potential students to watch my videos on YouTube first. It's free. It's completely free, right? You can learn from them, right? Now, if at some point you like my trading style and you want to stick to me, right, you can perhaps go and take a step further, maybe get a mentorship or the course, right, and getting the actual bundle. If you like my trading style. If you don't, you like somebody else, you like his trading style, then go to his YouTube channel, watch a couple of videos, see if you really like and you actually, it suits you better, his style, then you can look forward maybe buying a course or a mentorship to learn from him. All right? Please, signals. Don't get signals from anybody. Don't ever get signals because signals don't work. All right? Knowledge is key. If you want to learn from somebody, watch the YouTube videos from one single person if you like that particular style that he has and go for it. If you like his trading style, go to his video, watch his videos, and then at some point, eventually, I recommend you getting some sort of course, mentorship from that particular person, but stick to one. Stick to one. Because the more you keep jumping from trader to trader and seeing different styles, you're going to get confused. That's what causes the confusion because, oh, but Eduardo, right here, Eduardo is telling me that he enters in here, but Day Trading Addict is telling me that he enters here. So, oh my God, what do I do? This is so freaking confusing. No, you know what? I quit. I don't want to trade anymore. This is bullshit, right? That's going to happen. You're going to get so confused. You're going to get frustrated. So please, I just recommend you that. Just simply watch a couple of videos, see if you like the trading style, and if you want to take a step further, then at some point get some sort of mentorship or course. That's basically all I'm trying to say here. And just be careful with the scammers, please. There's a lot of scammers, and even on Instagram, right? As well, I was scammed a lot of times. There's a lot of fake scammers, fake Instagram accounts, and trying to show the smart money concept as well, and just confusing people and just trying to get and sell their signals or a lot of crazy things. So I hope it makes sense, guys. If you understand, please give it a big thumbs up. It motivates me to keep posting content for you that's really worth understanding, okay? I do know that I do sell my course, I do sell what I teach, I do sell my knowledge, right? You can learn completely for free if you want on my YouTube channel. You don't need to be purchasing anything, okay? You can totally learn for free this thing. If, however, in the future you want to be part of the team and you want to be trading with me in the group and be part of the team forever, you're free to check it and see if you like it, all right? Nobody's forcing anybody. That's with any other trader, okay? And I recommend you, if you really like this guy, go ahead, stick to him. If you really like this guy, go ahead, stick to him, all right? That's what I'm saying. Thanks again, guys, for watching, and I will see you in the next video. Take it easy.